Yo, it's crypto blood, Detroit flow, streaming from the D, knowing what to show. Indicators are wrong point, OG since 12, investing in trade, living life like a pro. I'm Rucker, Jerry, it's just blood too. Bad motherfucker in a good way, boo. Got my eyes on the charts, ain't no time to sleep. Kick that money, gotta keep it creep. That's my crypto blood, just the toasters on the line. Stacking my coin, got the market on my mind. Bitcoin, Litecoin, Ethereum too. Cash is king, but I'm looking for a new move. I know the culture of the markets like the streets. Got my finger on the pulse, can't nobody beat. I see the trends, I see the flow. Got my strategies in place, you know.
Rice TVX, the mic's live wire. American Pitbull, real gold buyer. Sound money advocate, rights defender. In the crypto arena, he's the top contender. From the gritty streets of the digital age, Rice lays wisdom, chapter and page. Silver, gold, he scores only the bold. Land, life, and liberty, these values hold.
You're live.
Constitution, deep dive, knowledge revival. Navigate the system, critical for survival. Rights engraved like inscriptions on metal. Pitbull in the game, lead foot on the pedal, foot on the pedal.
Oh, I heard what you did there.
Yes, indeed. Mix it up. Looking for a reliable crypto exchange? Look no further than Fairdesk.com. Trusted by Crypto Blood for over 2.5 years, Fairdesk powers Bloodelytics, his proprietary trading system known for highly accurate buy and sell signals. CB has trusted Fairdesk's reliable system for years to enhance his trading strategy with Bloodelytics. It's the backbone of consistently beating the market. So join CB and trade with confidence. Use the link in the description below and get 1 month free of Bloodelytics signals. Fairdesk.com. Trade smarter, trade better. All right, ladies and gents, we're live. Off the Chain, episode 110 with my main man, Rice Crypto, aka Rice TVX, aka what's going to be your new name on the new show?
Oh, I mean, I'm always Rice. Rice, Rice.
What's going on, bro? How you doing?
Good, man. How you doing?
I'm doing good, man. Doing good. We got a lot of people in the building. Let me just go through a quick roll call. MP, T. Will. We've got R.A. Daniel in the house. Extreme Content in the building. Commitment to Love. Who else we got? Mr. Sakila. Anything for clicks. Enso Harder. How do you say that one? Those are your peeps right there, right?
Terrible Spence.
Terrible Spence. Thanks for tuning in. Deve Ranger. It'll be a quarter basis point. I'm with you. I think it's going to be a quarter basis point as well. Top Signal in the building. Thanks for tuning in. No rate cut. Get wrecked. Oh, God. What do you think, Rice? What are we doing today? We both got our blazers on, so we look important, and got our bifocals on.
Yeah.
Important. Dressing up.
In a professionally match. I've been doing this though for a minute now, and I like.
Yeah,
it.
You have.
Shout out to Crypto Crow.
Got Crow in the building.
You will. Thanks for joining, my friend.
Hey.
No, we're definitely getting a rate cut, and I mean, I think it's definitively going to signal some upward action in the markets. But ultimately, when we had Gareth Soloway on a couple months ago, we talked about this. That ultimately, these rate cuts are going to signal market turmoil. It just takes a moment for it all to kind of kick in, and that might actually kind of bleed through till after the inauguration potentially. So
Okay.
we'll see. I definitely think that we're getting. I think we're getting 50. I think it was. I'm not sure if it was Short Bus, Elizabeth Warren, or somebody else, but it was suggesting that we needed to do 75 basis points.
75.
And then I've heard we need to do like a 3% cut, which would be 300. So I think they're going to go with, if you pull up what I have on my screen share, just super quick, you don't have to share it very long. This is the Fed monitor tool, and it basically is showing that it's now gone down a little bit, 54% chance of a 50. and a 36% or 64% chance. So the majority of the market's already signaling in a 50 basis point cut that we're going to get. If we look at the CME group, get rid of this, we're looking at the same thing, and it must be using the same measurements because it's basically the same thing, 63, 70 to 37, with 37% being the 25 and 63 being the 50. So the market is pretty much marking in a 50 basis point rate cut. If we don't get 50 basis points and we only get 25, I could see downward action on the market. If we get to 50, I assume, just like most people, we're going to see the markets kind of get a little volatile, and we're going to see a lot.
I think we're going to get 25. I don't know. We'll see. We've got
50, homie.
50.
Where are all my 50 people?
50.
50
cent. 50 cent.
50 basis points.
So I'm sure we got the rate decision. I'm just delayed here on my end.
Everything's delayed. I don't know.
Let's get over here.
Screwed up.
Agree with that? And how do they square an economy growing just fine with the concern about inflation we've heard both candidates mention and what they're hearing from constituents? How do they message that?
Well, look, I think one of the things that they're going to have to message is that there is risk to going 50 basis points. And one of the risks is that they could unanchor inflation. We saw PPI, we saw CPI data come out. The inflation data it's coming down, but there is some sign that it might be slowing. We still think it's coming down. We don't think inflation's a big problem. Look, the Fed has to take a bet here. They are taking risk. The risk is if they don't take a big bite right now and go 50 basis points, that it could be that the unemployment rate accelerates higher, and that creates a bigger problem down the road. But the other side of the risk is that if they do go too fast and inflation then starts to perk up a little bit too high, then I think they've basically signaled to the market that they're very aggressive and that this could create a bigger problem down the road. So in my view, I think 25 basis points on a risk-adjusted basis is more warranted, but that doesn't mean that a very good case could be made for 50.
All right, Jim, thanks very much. We'll come back to you in a very short time, but we are just seconds now away from the Fed's decision on interest rates. And for that, let's go to Steve Leisman.
Well, Piper's ain't
50 basis points, the Federal Reserve cutting interest rates by 50 basis points to a new range of 4 3/4 to 5%. There was one dissent, Fed Governor Michelle Bowman preferring to cut by 25, but 11 voting in favor of 50. It might have been close. I'll come back to that at the end of this report. The statement says the committee will consider additional adjustments to policy based on the data, the outlook, and the balance of risk. The summary of economic projections saying an additional 50 is expected or forecast by the median Fed member for this year, for a total of 100 this year. That would bring the median down to 4.4%, or an additional 50 basis points from where we are right now. Another 100 basis points of cuts expected through next year, bringing the rate down to 3.4%. All of that a bit above where the market is priced. And the new long-run rate would hit 2.9%. That's up a tick by the year 2026. The statement now says the Fed is firmly committed to supporting both maximum employment and the 2% inflation target. Before and for many months before this, the Fed had relied solely on saying it was focused on the inflation target. The committee has gained greater confidence, the statement said, that inflation is moving to that 2% target, and risk to both sides of the mandate now.
Yeah, I mean, I still kind of feel like it's not going to be an immediate reaction as far as upward. We may start seeing some people like blowing their wads here for a moment. But
I'm with Top Signal here. Watch out.
Reality sets in.
Yeah, I think we'll get, of course, the false move the day of the announcement, and then the next day we get the real move.
Pepsi, so we're both racist. I don't know who Pepsi is, but we are both racist.
You still racist, bro? No, we're racist.
He's talking to you.
Yeah, he's talking to me. Let's just remember the rate cuts on easy money can inflate us even higher. Absolutely. It's a spiraling
that's what you call a crack up boom.
Yeah, it's a spiraling
and I think
problem.
That's what we're ultimately going to have is a crack up boom. We're not going to see a market crash in the way that we typically, just like war. We're not seeing kinetic pew pew war. Everything is different in that aspect. So, in my opinion.
Yep. So this is the line, Rice, that I drew a few days ago, and I had Army Piper on. We talked about this trend line I have drawn here, and we're battling. We're trying to get back above it.
The market was pricing in 50 Will. There was most of the market was looking at 63 to 65%.
Yeah, they were looking for 50. I just thought he would just stick to the 25 so that he could ease into it. As I stated yesterday, doing 50 to me.
ECB or what? They just cut rates
last week. They cut a quarter.
And then Canada somebody.
But doing the 50, Rice, lets everyone know the shit is worse than they want to portray.
Admit. Yeah.
Exactly.
I mean, we're not getting this supposed soft landing that people have been talking about. And we're definitely, if we're not already in the recession, we are entering a recession. All signs point to yes. We've been saying this. So it's going to be interesting to see how the market. That's what I'm saying. If a crash up would be like inflating the bubble. If they do drop interest rates too fast, too low, too fast, we could see the beginning of what we would call hyperinflation 100%. So that's why I've been saying in this situation kind of like for several years now, it's like a damned if you do, damned if you don't scenario.
Yeah, we're at that point. We're definitely at that point. And
it's like,
as
just
I've
what is
stated
what
before,
is the lesser of evils?
No matter what, Rice, what it was, 50 or quarter, it didn't matter. It marks the end of a cycle. And seeing that they did 50 lets me know it's going to really roll over quicker than we probably expect.
But like I said,
meaning the markets.
I still think that the euphoria could still kind of, and it also depends too, like what happens with the next FOMC meeting. So the next one that we've got is coming up November 7th. Then we have December 18th. Those are the next two of the year. So if they continue, like let's say we do 25 basis points the next go around, it's very well possible that we could still see kind of like this euphoria of rate cuts still kind of keeping the markets inflated. We also have the election going on too, which is going to help keep the markets slightly inflated, in my opinion.
Yeah.
Have you looked at the DXY recently? Because that's a big indication, I think, of where we're going. And the DXY looks like it's about to head a lot lower.
Yeah, we're going to take a look at shout out to Army Piper. Thanks for the super chat.
So it's a lot of almost kind of contradictory signals in some aspects.
Yeah, we've got
we're not actually attached to reality though either.
Not at all. Not at all. And to, T Will is saying that my thinking is old school as far as 50 basis points, meaning a rollover in markets. He thinks it's party time. I mean, it's been 100% that way so far, every time, T Will. So unless this time is quote unquote different, I don't believe it is. I think we still get a rollover. We've been in recession. Like my man says, fucks given, always, zero fucks given. Recession was redefined earlier this year. Recession will resume its definition soon. And I agree with him right there.
So again, we talked about the significance of astrology. We mentioned that there was a full moon partial eclipse last night. This FOMC meeting is actually a 2-day thing that started yesterday. Today was the day of the announcement. So we have noticed, and I've put this out in the past, how even the Federal Reserve is putting their meetings around these type of significant events, which is very, very intriguing. And I think we have a solar eclipse coming up in October.
Yeah, it's still a risk on asset, ladies and gentlemen.
October 2nd. We have another lunar eclipse the 17th of October.
Gold is still, Bitcoin is still a highly risk on asset, ladies and gentlemen. It's not a flight to safety yet.
No.
Don't get that confused because you'll end up getting your nuts clipped.
Well, my philosophy behind this, Bud, and I've said this numerous times, the way I look at the combination of precious metals and cryptocurrency, because they complement each other. And for me, precious metals, gold, silver in particular, are ways of preserving, in a present tense, preserving what you have to maintain that you have your purchasing power. You're saving $10,000. You put $10,000 in the bank. It's going to be losing value because of all the inflation, everything else that's happening. But you put that in something like gold, it's going to at least stay where it was. You're not going to be losing any purchasing power. And then things like cryptocurrency give you the opportunity to invest in your future, to expand upon your wealth. And then you could take those profits, turn them into precious metals to make sure you don't lose any of your purchasing power. And you can buy precious metals with crypto. So that's a good way of exiting out too if people are considering those type of options.
Yeah, I still think, you know, people, I don't want people to get it confused. I still think that crypto or Bitcoin is going to be the most outperforming asset class.
In the long run, yes. I mean, as of Bitcoin has been the best performing asset as far as I'm aware of all time.
Of all time.
I mean, definitely in our lifetime.
It will continue to do that, but it's
going to be a roller coaster of volatility.
Yeah, it's going to be a huge roller coaster.
It's not going to be like, you know, you can even look at when the gold ETFs were launched and how long it really took for that upward action to start taking place. Even though the Bitcoin ETF has been the best performing ETF of all time so far as well. So, I mean, Bitcoin's got all kinds of like awards in its little trophy box.
Right. The question though is how much longer can that last? We know that things can't be best performing forever.
Can you pull up the DXY?
At what point do we see Bitcoin's performance slow down? And some are even saying that it is slowing down since we haven't even seen a new all-time high with inflation adjusted numbers. So
yeah, and I'm hearing Ethereum is starting to sell off a little bit, but it doesn't seem to be that bad.
Is it period DXY? I think it is. What's the Dixie?
I thought it was just DXY. I would look on.
It's period Dix. It's period.
Okay.
DXY. There he goes. Let's pull that up. Or not.
Looks like a stable coin. $1.
Come on, man.
There are no suggested symbols for a dot. Why don't you just try DXY?
I clicked on. You didn't see me click on it?
I did. I seen you click.
And it still didn't. It didn't do anything.
It's racist.
It's very racist. It's dollarist. Yeah, I'm not
DXYN. Yeah, I don't know.
I'm not sure why. I can just go over to FX and maybe I can pull it from there. Nope, can't pull it from there.
USD. They don't have DXY.
What the fuck? What is going on, bro?
I mean, if I pull up a chart, yeah, I don't have no indicators and none of the cool stuff that you have. So,
I guess I could do it on
TradingView.
Yeah, I could, but I
mean that kind of like seems like the one that makes the most sense. Sorry to be an asshole, but
let's do it. No, because I don't. I have to change the.
Hold on. Share screen. Where am I at? Did you get it? I got it. You got US dollar. Yeah, I got it too. Is this the same thing? Where you have nothing on yours?
No, it is. I just have to change this.
It's like the chart went. The chart is gone. The dollar is dead.
It's dead. It's dead. So here you
look
go,
at that chart. What does that chart say? What? Yeah. What is the DXY telling you?
Let's go to the daily.
Let's go to the daily. I think you can go to all of them. It's going to look about the same.
No, not really. Still, yeah. I mean, you know, we did have a high at 114 in September of 2022.
Also, you have both presidential candidates, Harris and Trump, both saying they want to see a weaker U.S. dollar. That would mean more downward action on the DXY, correct?
Yes.
Okay. So what both presidents are intending would essentially bring the price of the DXY down, which ultimately has that inverse relationship with Bitcoin and cryptocurrency. Should bring the price of cryptocurrency up. But again, as the dollar is going down and crypto is going up, you're still not actually hitting real all-time highs because the dollar's losing so much value and you're judging cryptocurrency and Bitcoin on the price of $1.
Holler.
Why can't one Bitcoin just be one Bitcoin? Or why don't we
because that doesn't make any sense. I hate when people say that, Rice.
In gold, that would be great. It was better when it was $2,000 because it was easier to round up. You know, because if we're at 60,000, that's 30 ounces of gold.
You can't really reference anything against itself. That when I hear people say one Bitcoin is one Bitcoin, that doesn't make any sense in real life, Rice. You know that, right?
No, I get it, but it's funny how we denominate these so-called valuable assets against worthless pieces of toilet paper. Because like when we talk about the price of Bitcoin, what are we talking about it in denomination of? It's not Bitcoin.
No, it's in dollars.
Yeah.
You know why? Because
We're slaves.
The dollar is the most circulated currency.
It's the most liquid asset aside from treasury bonds.
The most liquid asset out there. So most certainly you're going to quite naturally price most things in the most liquid thing against it.
It's the worst, best Ponzi out there.
Yeah. This Dixie though does look bearish, Rice.
That's what I'm saying.
It definitely looks bearish.
I've been listening to a lot of macroeconomists that have been looking at this and saying that we are definitely heading downward, which should have an inverse relationship on stocks, crypto, everything. And with that being said, that's where we could start to see that crack up.
In risk on assets?
In everything. You know, like the everything bubble. It's going to pop sooner than later.
I got one more trend to draw. Right there. Pow!
Pow! What is that telling us? I don't understand just line communication.
Okay, so so this is telling us that we would have to break 99 roughly for us to roll over and head lower. Okay, so I'm not bearish, Rice, until we break this trend line here of 99 essentially.
Okay.
We could get a dip below and fake out a lot of people.
We're not too far away from there, technically, though, right?
We are currently
it's not
1% away,
1%?
Which is a lot. That's a lot.
It's a lot. It's a lot when it comes to forex markets.
Yes, that's a lot. That's a lot.
Yeah, I know.
But you got to watch this fake out right here, ladies and gents, because we could get a fake out to the downside and get a lot of people here, catch them, going short, and then we end up doing one of these moves, boom, and going back up.
We go back up, it starts to screw back up the other markets again, though.
Yeah.
Then the Japanese that carry trade starts to come back to haunt us.
Yeah.
Everybody thinks like when you stop talking about something, it just no longer exists or it's no longer a threat. There's like this entire financial system is like got booby traps all the way around it. That's why it's like a damned if you do, damned if you don't. That's why we're at a point of resetting. That's why they're trying to get ready for their 1984 surveillance programmable money currency coin, whatever the hell they're going to call it.
Yeah. I think we're seeing such crazy behavior from our politicians and everything within the United States, because it's like an unconscious knowing that the shit has hit the fan. There's no way we can preserve the wealth of this nation. So they're just like grabbing for everything and anything. That's how I feel about.
Well, I mean, it was about a year ago, roughly, maybe a little bit over, maybe 13 months ago, that we started seeing or hearing about some of these big financial people selling off stocks.
Yep.
Whether it's Jamie Dimon selling off JP Morgan stocks, or whether it was Buffett offloading. I don't know if it was Apple and other in combination.
Well, that is current. That has been
Bezos. A lot of these big players have been taking money off the table, and that should be a big sign to people. But again, most people don't pay attention to this shit.
Yeah,
sheeples that are the bread and circus is keeping them distracted, just like old Roman times.
Yep.
And I'm telling you, the bread and circus this season is crazy.
Gareth on the Dixie. Have you talked to Gareth Soloway?
I haven't, but I think I was proud that Crypto Face, I think, had him on. I haven't checked it out, but I saw something about the word Bareth. So I'm really glad that Bareth is starting to become a thing.
Embrace his bearishness.
And he's embracing it.
Oh.
He should get Bareth tattooed. He should actually get that little teddy, but he should get that whole meme I created tattooed.
I think, okay, so tell me how you feel about the markets. Now we have a 50 basis point. Do we roll over? Do we go higher? What's your take?
We're in election season, so I still feel like we're going to be going higher. They're going to be doing everything they can to make everything seem like it's as good as possible. If the markets aren't going up, it doesn't look like everything's good. So as long as they can keep that facade going, the Wizard of Oz, the curtain hasn't been pulled back quite yet. And I think people still are There's a lot more sheeple than there are people that use critical thinking that are preparing for what is upon us.
I'm still in the camp of
I think they're still going to put it. They're going to put it on Trump too, and Trump ain't so. At it, it looks like Trump is going to win unless we have some kind of fuckery going on again. And if Trump wins, I mean, obviously, whoever gets elected is going to be dealing with this problem, because it doesn't matter who's selected at this particular selection. They're going to inherit what all the other people that were selected before them.
Hence why I'm almost changing my stance, Rice. I kind of want Kamala Obama to win now.
You are, you live in Detroit. I know there's no beaches near you, but you are a flip-flop motherfucker. Is there a beach in Detroit?
Yeah, we got the Belle Isle Beach. Shout out to everyone in the D. Let's go. Let's go.
Oh man, I can't. Yeah, I think I want her. I think CERN did something in the past couple of days, man. Last week you were now, Rice. Last week you were wearing a Trump MAGA hat. Just a couple days ago, just literally Sunday, you said, "I think I'm going to have to vote," and basically insinuating that you were pro-Trump. That was Sunday. We are now at Wednesday, and you have now picked another candidate that you're supporting.
I'm not picking Kamala. I'm not voting for Kamala. I want Kamala to win so that they can't blame what's about to happen the next 4 years. They can't blame it on Trump, because that's what they're going to do.
If she wins, they're not going to blame it on Kamala. They're going to put it like this is something that she was inherited. It was a gift that she didn't want that was given to her. They're not going to just like the whole idea of her saying in these debate or and just different blurbs that are coming out, like her saying, if I'm elected, I'll do this, I'll do that, I'll do this. I'm like, well, hey, aren't you in office? Can't you do any of that shit now?
Can't.
I mean, it doesn't really seem like
I heard she's a lazy ass.
Well, then how is she going to get something done as president?
Person, bro.
Right. How's she going to get something done as president? So it's campaign promises or sales pitches. And most of the time, they don't follow through with the campaign promises. So it doesn't matter who gets elected. If Trump gets elected, they're going to make this look like it's Trump's fault. But there's obviously no way that this is just Trump's fault.
That's what I'm saying.
Was Trump president back in 2007, 2008?
Legacy,
was he president in 1999? Was he president in 1987?
Listen, to preserve his legacy, I want her to take the blame. Because they can't blame. They're going to try to somehow blame Trump for the next 4 years. If she wins and the economy goes lower, they're going to try to go back 8 years and say it was Trump and all this.
We know that Trump is not going to run again in 2028. I mean, at that point, he's going to be a little bit too old.
Yeah, this is his last.
Elected. Yeah. So I don't know, man. At the same time, it's like, do the Democrats want to inherit what's coming though? Either too. Especially
yes, they do. That's how power hungry.
No, because listen. You can martial law this shit, and all of a sudden UN gets involved, and whoever's president, doesn't matter.
Listen, man, the Democrats are so irrational and retarded that they rather just have power and deal with the consequences.
But watch, RFK Jr. is going to be Trump's VP nomination before November 5th, and they're going to win. I don't think he's gonna
backtrack on Vance.
Well, there's no way Vance is who people are gonna want to be president in 2028. So the idea that Trump should be setting somebody up for the next election, not dead ending the shit, and then starting
VPs
fresh.
Are never selected as a setup for the president.
Reagan's VP was Bush.
I know, but
Biden. We've had I think just as many incumbent VPs become presidents as none in our lifetime, because it happened with Biden. Biden was Obama's, and now potentially Kamala under Biden.
Kamala.
Gore technically should have won the election, and that would have been another VP incumbent who would have won. And that would have probably been more VP incumbents. It actually seems like the best way to get somebody in is to have them as your VP. Because if you have the right VP, you're kind of securing
Pence was whacked.
Potentially 16 years. Well, I agree. I agree. But again, like Cleveland 100 said, I'm right. It doesn't matter.
What? It doesn't matter who wins?
No, it really doesn't.
It matters from a symbolic standpoint.
They're both
from a
for weaker dollars. They're both talking about fracking. It doesn't seem like there's actually much of a difference between their two campaigns at this point.
No. Hold on, Rice. There is a difference.
The unrealized capital gains and some of those things.
It's a big difference. She doesn't have a platform that she's running on. She gets asked on ABC, and I'm just wondering when is she going?
That's the crazy thing. She doesn't even need a platform.
When does she do a podcast? Do you think she does a podcast between now and November 5th? Trump has been on.
No, I know
5, 6.
I think actually at this point we might be able to have a chance to get Trump on the way he's going.
Yes, I thought about that. I said, "Damn, this guy's out here just." He's like, he's.
Yeah, no, I thought about trying to hit the campaign out and be like, "Hey, can we get put into the mix?" I got some questions. I got some real questions.
Shaky Voice, aka RFK, was on. I think he meant on the pedal flight. I'll say it anyway. They don't. I mean, come on now. Pedo flight logs, Rice. Won't talk about that though. So John Hill is saying that you're
okay, well, let me tell John Hill what's been going on here. I've been losing subscribers every single freaking day. I haven't put out a video since last Wednesday because every time I put a video out, I lose more subscribers. It makes it worse for my channel every time I put a video out. Right now, I am at 31,628 subscribers. 6 months ago, I was over 32.2. 7, 8 months ago, maybe I'm a little off on the timeline, but it's just I have so many people unsubscribe from my channel that and I wasn't really 100% I was going to say it on this show, but probably going to be pausing what I'm doing on this side of the channel for quite some time. So it doesn't seem to be fruitful at all, and no, I'm just going to get and start focusing on the rice against the grain stuff
and
just continue down. I mean, it's just
I want to say this. I didn't talk to you offline about this.
If people want to go to Rumble and in our X accounts, when we do those uncensored live streams, we do talk a lot about a lot of things. But John Hill, you got to also realize that sometimes you need to be selective about your battles. And if you're going to use a platform like YouTube, where they have every right to censor you and get rid of your content, you're going to have to play by their rules. Or, as a matter of fact, let me make sure. Yeah, he's actually watching us on YouTube. Thank you.
Oh, John Hill?
Yeah.
Thanks, John Hill.
So if you're watching us on YouTube, knowing that, we had to be careful about what we say, then yeah, we are going to kind of skate around certain words. I mean, it's only prudent to do so. Otherwise, we're just destroying what we're doing as a livelihood. So it's just with my channel, same thing as the Fed. Damned if you do, damned if you don't.
So you're right. You're right. My question to you is, with Obama, you think they have very similar platforms they're running on?
There's a lot of similarities, I'm saying. I'm not saying everything is 100% parallel, and it seems like Kamala is almost copying Trump, when he's starting to get a little bit popular with these things, the tips thing. Yeah, because I think from what I heard, and I'm not sure if it was the Inflation Reduction Act or which act it was in, but there was some legislation that had to do with going after tips, like the service industry and tips. And I think it was tied up in the House, and it was because of the position of the vice president. They get to be the decider of, to break the tie. And she broke the tie in favor of going after the people with tips. So I don't know if it had anything to do with the IRS legislation, if it was in combination. I'm not sure what the specific bill. If people are watching and they know, please share. That'd be greatly appreciated. But it seemed like in 2022, she was the tiebreaker in something that was going against the service industry. And then now she's saying she's going to not tax people on tips, which is just, again, I mean, these politicians can say all these words blah, 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 blah. But it doesn't mean anything because they're not going to really do it. They're really not going to do it. They're not going to allow Americans to get an edge up. The poor Americans, I should say.
So here, I hear you, bro. Bitcoin battling on that line. We're going back and forth. This is a 1 hour. I still think we're going to get an actual, a real move tomorrow, the day after FOMC. That's usually what happens. I think that move will be down as things wear off. 50 basis points has been announced. Now Wall Street will want more. But the problem is, the more they cut rates, the cheaper money gets, the higher inflation potentially occurs in the future. Now, this is not the reason why it won't be an immediate effect, Rice, is because unlike 2020 and the pandemic, there was money injected directly into the system, unlike any other time before. QE 1, 2, 3, Operation Twist, all that stuff was not a direct injection into the system, so you didn't see the immediate inflation. And so I don't think with the rate cuts happening, you won't see an immediate effect with inflation going up. Now, if they cut, and I've heard this, I don't know if anyone in the chat room knows about this. I've been hearing, Rice, that they're going to cut the quantitative tightening soon. Did you hear about that? That program is still going on.
That's where they're offloading their assets?
Yeah. Yes.
So they're going to reduce offloading assets.
I think they're going to eliminate it altogether.
Is it because they hit a certain target number, or is it because that's what's needed to be done with their modern money mechanics?
I have no clue.
Okay.
I just know they're going to be stopping quantitative tightening. A lot of people didn't even know that was still going on. So in conjunction with lowering rates and stopping quantitative tightening, that should be an indication to everyone out there that shit is not what it seems. The economy is not doing well at all.
No, so for the next meeting over for the Fed rate monitor tool, there's a 42% chance for a 50, because where are we at right now? What is the Fed rate? 520, 525, 500. Is that what it is right now?
The current Fed rate is going to be 5.
Just 5. Okay, so there's a
actually 420, 475.
475. Okay, so there's a 57% chance of 4.5 to 4.75, which would be another 25 basis points. And then there's a 42% chance of a 4.25, 4.5, which would be a 50.
Maybe we're at 5, bro. We're at 5. We're at 5.
So, okay, so cutting it down 25 to 50 right now, there's a 57% on the 25 basis points, 42% on the 50 basis point cut.
All right, bro, let's get to the podium and watch
our favorite.
To our 2% goal. Today, the Federal Open Market Committee decided to reduce the degree of policy restraint by lowering our policy interest rate by a 0.5 percentage point. This decision reflects our growing confidence that with an appropriate recalibration of our policy stance, strength in the labor market can be maintained in a context of moderate growth and inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I will have more to say about monetary policy after
this is going to be a
reviewing
boring
economic
meeting,
developments.
I can already tell.
Recent indicators suggest that economic activity has continued to expand at a solid pace. GDP rose at an annual rate of 2.2% in the first half of the year, and available data point to a roughly similar pace of growth this quarter. Growth of consumer spending has remained resilient, and investment in equipment and intangibles has picked up from its anemic pace last year. In the housing sector, investment fell back in the second quarter after rising strongly in the first. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to remain solid, with a median projection of 2% over the next few years. In the labor market, conditions have continued to cool. Payroll job gains averaged 116,000 per month over the past 3 months, a notable step down from the pace seen earlier in the year. The unemployment rate has moved up but remains low at 4.2%. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of elevated inflationary pressures. The median projection for the unemployment rate in the SEP is 4.4% at the end of this year, 0.4 higher than projected in June. Inflation has eased notably over the past 2 years, but remains above our longer run goal of 2%. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.2% over the 12 months ending in August, and that excluding the volatile food and energy categories, core PCE prices rose 2.7%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.3% this year and 2.1% next year, somewhat lower than projected in June. Thereafter, the median projection is 2%. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. For much of the past 3 years, inflation ran well above our 2% goal, and labor market conditions were extremely tight. Our primary focus had been on bringing down inflation, and appropriately so. We are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our restrictive monetary policy has helped restore the balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remain well anchored. Our patient approach over the past year has paid dividends. Inflation is now much closer to our objective, and we have gained greater confidence that inflation is moving sustainably toward 2%. As inflation has declined and the labor market has cooled, the upside risks to inflation have diminished and the downside risks to employment have increased. We now see the risks to achieving our employment and inflation goals as roughly in balance, and we are attentive to the risks to both sides of our dual mandate.
Exactly, Britt.
In light of the progress on inflation and the balance of risks, at today's meeting, the committee decided to lower the target range for the federal funds rate by a 0.5 percentage point.
But we've been saying this for quite some time.
0.75% to 5%. This recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we begin the process of moving toward a more neutral stance. We are not on any preset course. We will continue to make our decisions meeting by meeting. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 4.4% at the end of this year and 3.4% at the end of 2025. These median projections are lower than in June, consistent with the projections for lower inflation and higher unemployment, as well as the changed balance of risks. These projections, however, are not a committee plan or decision. As the economy evolves, monetary policy will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we can dial back policy restraint more slowly. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we are prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation back down to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals.
And
Thank you.
bullshit.
I look forward to your questions.
Here we go.
He kept it
Steve
really.
Hyde from CNBC.
Pipe in
Thank you,
your
Mr. Chairman, for
FaceTime.
my questions.
He kept
In
it
July,
really
you
chill,
said
though.
you
He
weren't
didn't say
necessarily
nothing
thinking about a
about
50. You didn't want to be
recession.
specific, but you said you weren't thinking about a 50. The inflation data last week came out a little firmer than expected. Retail was strong, third quarter GDP
Here's
running
Steve
3%.
Leisman.
So what changed that made the committee go 50, and how do you respond to the concerns that perhaps it shows the Fed is more concerned about the labor
guys know
market?
each other's life.
And I guess should we expect more 50s in the months ahead? And based on what should we make that call? Thank you.
G-Unit.
So, okay, a lot of questions in there. Let me jump in. Since the last meeting, we have had a lot of data come in. We've had the two employment reports, July and August. We've also had two inflation reports, including one that came in during blackout. We had the QCEW report, which suggests that suggests that the payroll report numbers that we're getting may be artificially high and will be revised down. You know that. We've also seen anecdotal data like the Beige Book. So we took all of those and we went into blackout and we thought about what to do, and we concluded that this was the right thing for the economy, for the people that we serve, and that's how we made our decision. So that's one
People
question.
that we serve.
What was
Wall
the
Street, yes.
second and third?
Sorry, thank you, sir. How do we figure out in the months ahead, is there another 25 or 50 coming in? Based on what shall we make that call? Thank you.
Sure. So
It's the banks that
a
are
couple
the
things.
shareholders that they're talking about.
a
The
good place to
shareholders
start
of the
is
Federal Reserve.
the SEP.
That's
But
who
let me
they're
start with what I said,
leading
which
to.
was that we're going to be making decisions meeting by meeting based on the incoming data, the evolving outlook, the balance of risks. If you look at the SEP, you'll see that it's a process of recalibrating our policy stance away from where we had it a year ago when inflation was high and unemployment low, to a place that's more appropriate given where we are now and where we expect to be. And that process will take place over time. There's nothing in the SEP that suggests the committee is in a rush to get this done. This process evolves over time. Of course, that's a projection. That's a baseline projection. We know, as I mentioned in my remarks, that the actual things that we do will depend on the way the economy evolves. We can go quicker if that's appropriate. We can go slower if that's appropriate. We can pause if that's appropriate. But that's what we were contemplating. I would point you to the SEP as just an assessment of where of what the committee is thinking today, what the individual members rather of the committee are thinking today, assuming that their particular forecasts are realized.
Hi, Chris Rugaber at Associated Press. Thank you. The projections show that the Fed officials expect the Fed funds rate to still be above their estimate of long-run neutral by the end of next year. So does that suggest you see rates as restrictive for that entire period? Does that threaten the weakening of the job market that you said you'd like to avoid?
What I'm saying,
Or does it suggest that maybe people see the short-run neutral as a little bit higher? Thank you.
I think the way I would really characterize it is this. I think people write down their estimate, individuals do. I think every single person on the committee, if you ask them what's your level of certainty around that, they would say there's a wide range where that could fall. So I think we don't know. There are model-based approaches and empirically based approaches that estimate what the neutral rate will be at any given time. But realistically, we know it by its works. So that leaves us in a place where we expect, in the base case, to be continuing to remove restriction, and we'll be looking at the way the economy reacts to that, and that'll be guiding us in our thinking about the question that we're asking at every meeting, which is our policy stance the appropriate one? We know if you go back, we know that the policy stance we adopted in July of 2003 came at a time when unemployment was 3.5% and inflation was 4.2%. Today, unemployment is up to 4.2%. Inflation's down to a few tenths above 2. So we know that it is time to recalibrate our policy to something that is more appropriate given the progress on inflation and on employment, moving to a more sustainable level. So that the balance of risks are now even. And this is the beginning of that process. I mentioned the direction of which is toward a sense of neutral. And we'll move as fast or as slow as we think is. What you have is our individual accumulation of individual estimates of what that will be in the base case.
Howard.
Howard Schneider with Reuters. How close was this in terms of the decision? You do have the first dissent by a governor since 2005, I think. Was the weight clearly in favor of a 50, or was this a very close decision?
I think we had a good discussion. If you go back, I talked about this at Jackson Hole, but I didn't address the question of the size of the cut, left it open, and I think we left it open going into blackout. And so there was a back and forth, good diversity of division, excellent discussion today. I think there was also broad support for the decision that the committee voted on. So I would add, though, look at the SEP. All 19 of the participants wrote down multiple cuts this year, all 19. That's a big change from June, right? 7 of them wrote down 3 or more, 17 of the 19 wrote down 3 or more cuts, and 10 of the 19 wrote down 4 or more cuts. So, there is a dissent, and there's a range of views, but there's actually a lot of common ground as well.
Follow up to that.
Yeah, we all get paid by the same people.
Can you give us some guidance as on the pacing here? Would you expect this to be running every other meeting once we get into next year? For example,
we're going to take it meeting by meeting. As I mentioned, there's no sense that the committee feels it's in a rush to do this. We made a good, strong start to this, and that's really, frankly, a sign of our confidence. Confidence that inflation is coming down toward 2% on a sustainable basis. That gives us the ability. We can, make a good, strong start, but.
Because all this
I'm very
shit
pleased
is
that we did.
lagging
To me, the
anyways.
logic of this, both from an economic standpoint and also from a risk management standpoint, was clear. But I think we're going to go.
Right, so when you have garbage in, garbage comes out. So the numbers are fake and they're lagging. The Fed is lagging. So you got a double situation here where they're going to be behind the curve. And look how she's holding that.
Colleagues in your economic projections today see the unemployment rate climbing to 4.4% and staying there. Obviously, historically, when the unemployment rate climbs that much over a relatively short period of time, it doesn't typically just stop. It continues increasing. And so I wonder if you can walk us through why you see the labor market stabilizing, sort of what's the mechanism there, and what do you see as the risks?
Yeah. So, again, the labor market is actually in solid condition.
The matrix is glitching again.
The move today is to keep it there. You can say that about the whole economy. The U.S. economy is in good shape. It's growing at a solid pace. Inflation is coming down. The labor market is in a strong pace. We want to keep it there. That's what we're doing.
Silence.
To T. Will's point, yes, I agree. We've been in a recession for years. At least last year, November of last year, October of last year, for sure. What changes? Well, if they actually officially announces a recession rise, then it's a self-fulfilling prophecy. Then your business owners, your small business owners, I talked about this with Army Piper yesterday. Small business owners then know, hey, I'm not going to hire anymore. I'm not going to use more money on expanding.
It's going to freeze up.
It's going to freeze up. So, so that's the difference. So that's why they're holding out, lying,
people even
and doing all that
further.
Correct.
Downsize
the
even further. They potentially can. Exactly. Which will cause a higher number of unemployment.
Yep. Exactly. So let's get back.
It's about the level of the funds rate, the high nominal level of the funds rate relative to what might be expected if you're trying to maintain equilibrium.
So I think it's about
He's like, I'll hold this microphone if I have to, but I can talk
with
loud
a policy position that was put in place, as you know,
if I had to hold the microphone,
July
right,
of
that's how I would hold
2023,
it.
which was a time of high inflation and very low unemployment.
Exactly.
We've been very patient about reducing the policy rate. We've waited. Other central banks around the world have cut, many of them, several times. We've waited, and I think that patience has really paid dividends in the form of our confidence that inflation is moving
dividends,
sustainably.
man. Where is these dividends going?
So I think that is what enables us to take this strong move today. I do not think that anyone should look at this and say, oh, this is the new pace. You have to think about it in terms of the base case. Of course, what happens will happen. So in the base case, what you see is, look at the SEP. You see cuts moving along. The sense of this is we're recalibrating policy down over time to a more neutral level, and we're moving at the pace that we think is appropriate given developments in the economy in the base case. The economy can develop in a way that would cause us to go faster or slower, as the case says.
And if I could follow up on the balance sheet. In 2019, when you did the mid-cycle adjustment, you ceased the balance sheet runoff.
Why'd you move the mic closer?
With the larger cut today, should there be any signal inferred about how the committee would approach end state on the balance sheet policy?
So in the current situation, reserves have really been stable. They haven't come down. So reserves are still abundant and expected to remain so for some time. As you know, the shrinkage in our balance sheet has really come out of the overnight RRP. So I think what that tells you is we're not thinking about stopping runoff because of this at all. We know that these two things can happen side by side. In a sense, they're both a form of normalization.
I woke up wanting to endorse Harris, and here we are Wednesday for the FOMC meeting. So it's been a crazy 4 days.
I didn't say endorse her. Hell to the no. I said go ahead and let that Obama win.
You're endorsing her.
No, never. Over my dead
market
body.
amid improved supply.
But you just did.
Or is there anything to suggest that something more
win.
concerning perhaps is taking place here, given that other metrics of labor demand have softened too? And I guess in direct fault to Gina is, why should we not expect a further deterioration in labor market conditions if policy is still restrictive?
So I think what we're seeing is clearly labor market conditions have cooled off by any measure, as I talked about in Jackson Hole. And but they're still at a level. The level of those conditions is actually pretty close to what I would call maximum employment. So you're close to mandate, maybe at mandate on that. So what's driving it? Clearly, payroll job creation has moved down over the last few months.
You don't think they won't do that, Jay Crypto-minded?
Meant by many other measures, the labor market has returned to or below 2019 levels, which was a very good, strong labor market.
Yeah, because it looks like
this is more sort of 2018, 17. So
a lot of manipulation. I mean, the way that the debate was handled, we talked about that. I think there's been some things come out later about that as well. These two attempts on Trump, it definitely seems like somebody is not playing fair.
No, you don't have to. You're sugarcoating it.
So if they're doing all this, why would you think that they're not going to do everything they can between now and then? And also, did I not say it wasn't going to be the first time? If it wasn't the first time, and it's still not, it's still not going to be the last time. They're going to keep doing that until they get them.
Wow. And that's what people fail to realize, Rice. We know that security, Secret Service gets heightened as if you get to the status of actual president. But just because he gets elected doesn't mean as you stated, they're going to continue to attempt.
They did.
It might
get Reagan
escalated.
They shot Reagan while he was president.
Right. So the danger is not over
Kennedy
once he gets in or if he gets in. Endorsing means approval or support. Let Obama win means give them the problems they are asking for. There you go, T-Will. That's what I'm saying. Give them what they want. Give them what they want.
You're just trying not to get put in one of those camps.
Nah. Trump
That's all
said
it is.
no
You're just
to
trying
a
to
second
save
debate,
yourself from
then
a camp.
You tried to kill him. Yeah, exactly. Yeah, you're right. You're right. Rice knows because Rice Boy is behind the hit. Don't forget the man in the hat. Yeah.
I orchestrated this whole
Have you talked
thing.
to him? Have you talked to the guy?
Still no response
nothing.
from
That's
the future of the
suspicious,
past.
Bro.
Well,
That is suspicious.
It's. I mean, it isn't, because when I met the guy after like we were like everything was done, I had asked him before then Bruce to connect me with Vincent, and that never took place back then. So it was kind of a long shot, anyways. The guy, if you actually, he doesn't do interviews. That's the thing. Like, he doesn't do it. I don't think there's any videos out there. There might be like something at like a Trump rally where somebody like maybe came up to him and asked him a question or something, but I really doubt that. Like, he was, even though he likes to appear everywhere, he doesn't talk about it.
Very strange.
It is. But like I said, I hung out with the dude, and I really did not get no vibes that he was a time traveler. But I've never met a time traveler before to compare it.
How do you know?
Well, that's what I'm saying. I can't really technically say.
John Titor, baby, John Titor.
CIA.
I want everyone in the chat room right now. Drop us a 1 if you think 50 basis points is bullish for crypto. Drop a 2 if you think it's bearish. Beareth Soloway for crypto. Let us know on X and in the YouTube chat rooms right now. Let us know. I think
it's bearish for crypto because it's showing weakness in the system. And if crypto is technically, if people look at crypto as a hedge against the dollar and what is happening with the system, then it makes all bit of sense that as they cut interest rates, it's going to be positive for the crypto market. But the crypto market's also very correlated to the stock market, and I don't see the rate cuts being 100% great for the overall stock market 100% either. So
wait, what did I say? 1 for bearish?
You just said bullish. You endorse Kamala Harris.
No. I don't want to see. Nope. We're not going to let people go ahead and do those little out of context Trump clips on Blood.
Do not unsubscribe from Blood's channel just because he's endorsing Kamala Harris.
I'm not endorsing Kamala at all.
Don't give this video a thumbs down. Don't do anything negative. Just be a friend and understand that your friend has lost his mind.
One is everyone's saying that it's bullish for Bitcoin.
I appreciate everybody's input, but a lot of people don't really truly, and including myself, fully understand economics. And the way that this has been dissected to me from a lot of different macroeconomists is, in the long run, in the bigger picture, it's not good. In the short term, it looks good. But once the reality of that, I don't think it's going to be a day, but once the reality of that looks good, wears off, and they realize it's not necessarily good because it signals something further.
And there you go, Mr. X. Now you're thinking, Mr. X.
But a lot of people,
you had to come back, reevaluate, then there you go. That's it, bro. Basically, I put it to you this way, Rice. If any of you out there believe that the economy is going to be worse than it is today in the next 6 months, 12 months, then you have to know that people aren't going to be buying Bitcoin to speculate on. They're going to be saving their money. They've been laid off.
Trying to survive in a lot of senses.
Trying to survive. They're not going to be buying Bitcoin until what Brit VR says here, until the money printer starts again. And it will. Don't get me wrong. This is what I'm saying.
And when the printing begins, it's just going to...
Bitcoin's going to go crazy.
And again, that's where we could see that crack up. You know, I mean, that's where I ultimately think that we're just going to be inflating this balloon so much that at some point, I'm sure everybody's been in this position where you've blown up a balloon. And you blew that balloon up really big, and it was huge. And then you're thinking, maybe I can get a couple more puffs of air in here and get it to be just a little bit bigger. And you do like 1, and it pops. You do 2, and it pops. That's kind of where we're at. That's
how do you feel about what Twill is saying here? Is the people aren't buying. Everyday average Joe, 6-pack Joe ain't buying Bitcoin. It's the institutionals. But yeah, I agree.
Yeah, I would say so.
But I still think that institutions aren't going to be risk on either if they see the other.
We are starting to see like outflows with the ETFs. I'm not sure what the continuation of those outflows are, but we are seeing outflows. Did you find a Family Feud video? Seems like I found it. Am I still looking for a reward? Family Feud.
It's not Family Feud, man. It's Jerry.
Yeah, you definitely didn't find a video if you're looking for some Family Feud. I guess you could have called what took place on there a family feud. PB, you have to email me at ricecrypto@gmail.com. And if you haven't found it, I'll get with Blood and figure out some sort of reward that we can offer for people to find it. There definitely will be a reward.
You see risk that further labor market cooling will have to come through.
So on the job creation, it depends on the inflows, right? So if you're having millions of people come into the labor force, and you're creating 100,000 jobs, you're going to see unemployment go up. So it really depends on what's the trend underlying the volatility of people coming into the country. We understand there's been quite an influx across the borders, and that has actually been one of the things that's
Screw eating bugs, man. We can eat ducks, geese,
and the other
cat,
thing is just
dogs.
a slower hiring rate, which is something we also watch carefully. So it does depend on what's happening on the supply side. And on the beverage curve question, yes. So we all felt on the committee, not all, but I think everyone on the committee felt that job openings were so elevated that they could fall a long way before you hit the part of the curve where job openings turned into higher unemployment, job loss. And yes, I mean, I think we are, it's hard to know that you can't know these things with great precision, but certainly it appears that we're very close to that point, if not at it, so that further declines in job openings will translate more directly into unemployment.
All right,
it's been
long-term
a great
DCA is
ride
always a
down.
good
I mean,
strategy,
we've seen
no
a
matter
lot
what.
of,
If you can afford it, long-term DCA
tightness come out of the labor
long-term
market in
gain.
that form without it resulting in lower employment.
He looked like he was trying to hold back a laugh.
Thanks, Joe Powell. Edward Lawrence, Fox Business. So we've heard some speculation that you may be going with the federal funds rate to 3.5%, maybe under 4%. And there's basically an entire generation that has experienced zero or near zero federal funds.
Aladdin. It's called Aladdin.
Yeah, Aladdin. Yeah. My thoughts. I don't really have any thoughts.
No, because the majority of trading is done by algorithms and AI anyways.
And you know, just
the
because
majority,
it's an algo doesn't
even
mean
blood,
it is AI.
Blood uses algos to trade.
Yeah, but I don't use AI. So, and you don't have to use AI. That's the misconception. Like, because markets are, the actions of the participants in markets are manifest through price. I mean, you might get
but it's
slight
feeding,
edge.
it's feeding the AI data. And now the other thing that people haven't really talked a lot about publicly is, and I forget how this took place, but BlackRock acquired some sort of entity that has a lot of data and has a lot of access to data. So now they're feeding the Aladdin AI with actual data in addition to market data. So it's incorporating like almost like human emotion, all these different things. And I think it makes the AI a lot more superior, especially if we think of the best traders as being non-emotional traders. Right now, AI, I don't think is capable of having emotions. So,
no, they are. That's the problem.
They might be. We might be.
So
past that point.
they might be just as bad as a human because they're still going to. They may have more data that they can act on, but I don't know, man. They become general. What do you call generative AI, where you have emotions and everything? Then I don't know. I just it'll be interesting to see. So this is a chart or an image that AI Griff sent us. What's your take on this? It's pretty interesting.
We're not
comparison between Amazon and Bitcoin.
Yeah, we're not at a bubble that's going to be like Amazon for crypto. I mean, I've heard a lot of comparisons to those charts, but we're not going to see what took place. Bitcoin is not going to see that same type of downward action, because what is that target price that is circled down there on the right hand side?
Yeah, I'm not sure. I don't think we're there
yet.
It
looks like 1,000. I can't quite see.
I can't quite see. It looks like 15
on the side where it says
12,000.
Where it says Bitcoin crypto bubble.
Looks maybe like 15, 12,000, something like that.
Yes, yeah. I don't see that. We would literally have.
We got a baddie on the pick on the
economy is in a good place.
Hold on now.
And our decision today is designed to keep it there.
Mister.
More specifically, the economy is growing at a solid pace.
Mixed.
Inflation is coming down closer to our 2% objective over time.
Harris.
And the labor market is still in solid shape. So our intention is really to maintain
the color that everybody's going to be
in the U.S. economy. True. And we'll do that by returning rates from their high level, which has really been the purpose of which has been to get inflation under control. We're going to move those down over time to a more normal level over time.
It's an everything flavor.
Follow up to that. Listening to you talk about inflation moving meaningfully down to 2%. Is the Federal Reserve effectively declaring a decisive victory over inflation and rising prices?
No.
She's pointing.
On red.
So inflation, what we say is we
Democrat.
You mean Republican?
Sustainable basis. And, we're not really, we're close, but we're not really at 2%. And I think we're going to want to see it be,
bone, baby.
around 2% and close to 2% for some time. But we're certainly not doing. We're not.
Yeah,
we're
I don't
not
see 10K Bitcoin.
saying mission accomplished or anything like that. But I have to say though, we're encouraged by the progress that we have made.
I don't see that chart playing out anytime soon either. AI.
No. I mean, if we were to go down like any
Katerina Sarajevo with Bloomberg.
30 seems around like the spot, but I don't even see us at this point right now going down that low.
Something catastrophic would have had to have occurred for that.
Yeah, and look how much stuff that we would consider to be catastrophic that has occurred so far. I mean, I think those two unalive attempts were they're less than 65 days apart, but I think it's less than 65 days because last Wednesday was 59 days since and that was 9/11 when I streamed when you were sick, yeah, so if you add, I think it's about 65 days, maybe 63, 64 days since the first attempt. Then we have what's been going on in, with the foreign pew stuff. So.
Yeah. I don't know, man. I just don't see it going that far, Rice. I just don't see it. I think we both agree on that one. Let's get back to this.
I'll share it with you because I don't want nobody running that thing through AI unless they clip it off a video and run it through AI.
It's the rest of the portfolio or of the elements that go into core PCE inflation have behaved pretty well. They all have some volatility. We will get down to 2% inflation, I believe, and I believe that ultimately we'll get what we need to get out of the housing services piece too.
Some of your colleagues have expressed concern that with starting to cut rates, you could reignite demand in housing and see prices go up even more. What's the likelihood of that, and how would you react to that?
So the housing market, it's hard to game that out. The housing market is in part frozen because of low rates. People don't want to sell their home, so because they have a very low mortgage, it'd be quite expensive to refinance. As rates come down, people will start to move more, and that's probably beginning to happen already. But remember, when that happens, you've got a seller, but you've also got a new buyer in many cases. So it's not, obvious how much additional demand that would make. I mean, the real issue with housing is that we have had and are on track to continue to have not enough housing. And so it's going to be challenging. It's hard to zone lots that are in places where people want to live. It's all of the aspects of housing are more and more difficult. And, where are we going to get the supply? And this is not something that the Fed can really fix. But I think as we normalize rates, you'll see the housing market normalize. And I mean, ultimately, by getting inflation broadly down and getting those rates normalized, that's the best thing we can do for householders. And then the supply question will have to be dealt with by the market and also by government.
Victoria.
Hi, Victoria Guida with Politico. Just following up on some of the labor market talk earlier, monetary policy operates with long and variable lags, and I'm wondering how much you see being able to keep the unemployment rate from raising too much comes from the fact that you're starting to act now, and that's going to give people more room to run versus just the labor market is strong. And then also, if I could, following up on Nick's question.
Oh, these women.
Well, the interesting thing is
basis point move as
have
partially
these
a response to the
extra
fact that you
move.
didn't cut in July,
Like,
and that
they
sort
need
of gets
to do
you to the
something
same
with
place.
that other hand. They
So
don't
you're
mind
right about
having
lags, but
left,
I would
they
just
need
point to the
something
overall
do with the other hand. All of these ladies.
pace.
They
If
have,
you
like,
look at
ADD or
forecasters or
something.
talk to companies, they'll say that they think 2025 should be a good year too. So there's no sense that the U.S. economy basically fine. If you talk to market participants, I mean, business people who are actually out there doing business. So I think, I think our move is timely. I do, and as I said, you can see our 50 basis point move as a commitment to make sure that we don't fall behind. So you're really asking about your second question. You're asking about July, and I guess if you ask, if we'd gotten the July report before the meeting, would we have cut? We might well have. We didn't make that decision, but we might well have. I think that's not.
I feel like I lose a piece of my
doesn't,
soul every time I watch these.
Really answer the question that we ask ourselves, which is let's look. At this meeting, we're looking back to the July employment report, the August employment report, the two CPI reports, one of which came, of course, during blackout, and all of the other things that I mentioned. We're looking at all of those things, and we're asking ourselves, what's the policy stance we need to move to? We knew it's clear that we clearly, literally, everyone on the committee agreed that it's time to move. It's just how fast do you go, and what do you think about the path forward? So this decision we made today had broad support on the committee, and I've discussed the path ahead.
Thank you, Chair Powell. Elizabeth Schulze with ABC News. Mortgage rates have already been dropping in anticipation of this announcement. How much more should borrowers expect those rates to drop over the next year?
Very hard for me to say. That's from our standpoint. I can't really speak to mortgage rates. I will say, that'll depend on how the economy evolves. Our intention, though, is we think that our policy was appropriately restrictive. We think that it's time to begin the process of recalibrating it to a level that's more neutral rather than restrictive. We expect that process to take some time. As you can see in the projections that we released today. And if things work out according to that forecast, other rates in the economy will come down as well. However, the rate at which those things happen will really depend on how the economy performs. We can't look a year ahead and know what the economy is going to be doing.
What's your message to households who are frustrated that home prices have still stayed so high as rates have been high? What do you say to those households?
Well, what I can say to the public is that we had a burst of inflation. Many other countries around the world had a similar burst of inflation, and when that happens, part of the answer is that we raise interest rates in order to cool the economy off, in order to reduce inflationary pressures. It's not something that people experience as pleasant. At the end, what you get is low inflation restored, price stability restored. And a good definition of price stability is that people in their daily decisions, they're not thinking about inflation anymore. That's where everyone wants to be, is back to what's inflation. We just keep it low, keep it stable. We're restoring that. So what we're going through now really it will benefit people over a long period of time. Price stability benefits everybody over a long period of time just by virtue of the fact that they don't have to deal with inflation. So that's what's been going on, and I think we've made real progress. We don't tell people how to think about the economy, of course, and of course people are experiencing high prices as opposed to high inflation, and we understand that's painful.
Greg. It's so painful. Okay, woman.
Chair Powell, Greg Robb from MarketWatch.com.
Oh, God.
I was wondering if you could go through, you said just at the beginning that coming into the blackout.
Talk about Barrett.
There was like an open thought of 25 or 50. The Fed could move either 25 or 50. I would sort of argue that when we had those two last speeches by Governor Waller and New York Fed President John Williams, that they were sort of saying that maybe a gradual approach was going to win the day. I mean, I sort of want to ask a 7-part question about this.
7-part question?
I mean, could you talk, would you have cut rates by 50 basis points if the market had been pricing in like low odds of a 50-point move like they were last Wednesday? You know, after the CPI number came out, there's a really small probability of a 50-point cut. Does that play in your consideration at all? Just talk a little bit about that. Thank you.
We're always going to try to do what we think is the right thing for the economy at that time. That's what we'll do. And that's what we did today.
I didn't even really hear his question.
Me either.
Simon. And that was a short answer.
Thank you, Chair.
Yeah, what happened to the
7-part? You've mentioned how closely you're watching the labor market, but you also noted that payroll numbers have been a little bit less reliable lately because of the big downward revisions. Does that put your focus overwhelmingly on the unemployment rate? And given the SEP projection of 4.4 basically being the peak in the cycle, would going above that be the kind of thing that would trigger another 50 basis point cut?
So we will continue to look at that broad array of labor market data, including the payroll numbers. We're not discarding those. I mean, we'll certainly look at those, but we will mentally tend to adjust them based on the QCEW adjustment, which you referred to. There isn't a bright line. You know, it will be, the unemployment rate's very important, of course, but there isn't a single statistic or a single bright line over which that might move that would dictate one thing or another. We'll look at each meeting, we'll look at all the data on inflation, economic activity, and the labor market, and we'll make decisions about is our policy stance where it needs.
But I don't know what porridge actually is. Have you ever had porridge per se?
I think porridge is just a British, old English, UK version of oatmeal. I believe.
I'm curious. I'm more interested in what porridge is.
Never heard nobody over here in the States say, I'm eating porridge this morning.
I am
way more interested. I'm eating porridge. Grandson blood, I'm eating porridge this morning.
With some spotted dick. Yeah, I guess I know the Fed is.
Huh?
I guess they are oats.
Is it just oatmeal?
It's what people in the United States and Canada call oatmeal.
Yeah, that's what I thought.
But it's P-O-R-R-I-D-G-E, porridge.
Oh, okay. Learned something new today.
Po, 2 R's and an idge. But it actually is. There is a question that says, is it spelled the way I just said it, or P-O-R-A-G-E? And maybe the French, maybe
both.
They do.
Yeah.
Porridge is our oatmeal. Oui.
Porridge.
Porridge.
That sounds so poor.
Oatmeal.
No, I can see a rich nigga eating oatmeal with a little.
I like my meal with oats, sir.
Yeah, but eating porridge? No, that sounds pretty poor. Round of applause. Jerome Powell ain't eating porridge, but he might eat oatmeal.
What if he had a spotted dick with it?
Oh, pause, no diddy. Let's get back to
And that's how the other central banks are set up too. It's a good institutional arrangement, which has been good for the public, and I hope and strongly believe that it will, continue.
Ew.
Kyle Campbell for American Banker. Thanks for taking the questions, Chair Powell. A couple regulatory developments in the past week that I want to ask you about.
Look at this guy, straight out of
Vice Chair Supervision, Michael Barr.
You think he would be wearing on his time
off?
Bro,
you are in alignment with him on those changes should be, if those have support on the board in a broad way.
Bro, this is Napoleon Dynamite's brother that decided to get his life together and go into economics.
Regulators.
You know what? Hold the second question.
Okay, sure.
Let me give you the second question. So, the answer to your question is that, yes, those changes were negotiated between the agencies with my support and with my involvement, with the idea that we were going to repropose the changes that Vice Chair Barr talked about, and then take comment on them. So yes, that is, that's happening with my support.
Is there a date for that?
That's not a final proposal, though. You understand? We're putting them out for comment. We're going to take comment and make appropriate
Always,
changes.
if they would,
We don't have a
quickly,
calendar date for that.
gonna
And as
cause
for the other
inflation to
agencies,
come
you know, the
back
idea is that
a lot
we're all
quicker
moving
and higher.
together. We're not moving separately. So that I don't know exactly where that is, but the idea is that we will move as a group to put this again out for comment, and then, you know, it'll come. The comments will come back 60 days later, and we'll dive into them, and we'll try to bring this
Not
to
like
a
Napoleon
conclusion sometime in the
Dynamite,
first
but
half
have
of
like
next
a
year.
mustache and goofy hair.
Yeah, shout out to More Light.
More Light.
More Light. Yeah, he's got they got it.
You know, I would bounce that question to Vice Chair Barr. It's a good question, but I don't have that today. Thanks.
At what?
Nothing. The guy that fought Ben Armstrong.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said earlier that the decision today reflects with appropriate recalibration strength in the labor market that can be maintained in the context of moderate
and she
growth.
needs something to do with that other
Even
hand.
though the policy statement says you view the risks to inflation and job growth as roughly balanced. Given what you've said, though, today, I'm curious, are you more worried about the
Is she
job
the same
market
color as the other girl
and
that we liked?
growth than inflation? Are they not roughly balanced?
It's like a
No, I think, and we think they
like
are
a
now roughly
social
balanced.
bank.
So
It's
if you
all
go back for a
really
long
low.
time, the risks were on inflation. We had a historically tight labor market, historically tight. There was a severe labor
I've
shortage.
noticed he also likes to use the word tight when he's talking to women.
Very hot labor market, and we had inflation way above target. So, you know, that said to us, concentrate on inflation, and we did for a
Concentrate on
while,
getting it tight.
and we kept at that. That the stance that we put in place 14 months ago was a stance that was focused on bringing down inflation. Part of bringing down inflation, though, is cooling off the economy and a little bit cooling off the labor market. You now have a cooler labor market in part because of our activities. So what that tells you is it's time to change our stance.
You have a
So
lot
we
of
did
people
that.
out of work right now.
The sense
and
of the
we're
change in
partially
the stance is
responsible
that
for it.
we're recalibrating our policy over time to a stance that will be more neutral. And today was, I think we made a good, strong
What just
start
happened
on
there?
that. I think it was the right decision. And I think it should send a signal that that we're committed to,
Is that a weird transition?
to coming
'Cause
up with a
like
good
we just
outcome
went to
here.
another video.
Vulnerable to a shock now that could tip it into recession.
I don't think so. I don't.
I know,
Bitcoin's
Hannah.
As I
dropping.
look, well, let me look at it this way.
Something the
I
lady in
don't
the
see
Tiffany
anything
blue
in the
said
economy
didn't
right now
reside
that suggests
well with the markets.
that the likelihood of a recession, of a downturn is
Oh.
elevated.
He
Okay,
said the
I
R
don't see
word.
that.
He said it.
You
Yeah,
see-
markets
you
are going
see
to.
growth at a
That's not
solid
good.
rate.
That's going to screw this whole
You
thing
see
up.
inflation coming
He
down.
said
You
the
see a
R
labor market
word.
That's still
Not
at
the
very
N
solid
word, ladies and
levels.
gentlemen. The
corrected
R
him.
So
word.
I
And
don't
then
really see that.
he
no.
should have just kept
Thank you.
going because it put more emphasis by correcting himself.
And now he's sleeping.
Okay, that was
He
Fed
said-
Chair Powell
that's
following the
that's
decision
a-
to cut
that's
interest
we're
rates by
done.
50 basis points. But
Oh,
how's
man, he
all
said the
day?
R word and got up out of there
Chair
like Hulk
Powell,
Hogan. We coming for you.
Does it go Hulk Hogan, we coming for you. I don't know if you have a control to take it back to where he was saying that.
I don't.
That sucks.
I don't.
Yeah, that's fucking
He
hilarious.
said the
That's
R
messed
word,
up.
not
He
the
messed
N
up.
word,
He
ladies
was
and gentlemen.
trying to
The
avoid-
R word is like the N word on Wall Street.
He was trying
You know
to
that,
avoid
right?
that word because that word, obviously, with the combination of a 50 basis point cut and saying that word, that's not good.
That's not good.
And as like he realized it. He realized it quick.
He realized it
corrected
and
himself,
walked
he
off the stage
stage.
really quickly. He closed
And
that.
Bitcoin realized it too. Do not say the R word on YouTube. The R word.
Oh my God!
I don't have an
He said
N-word
the R
pass.
word.
I don't have an N-word pass, so I can't say either the N-word nor the R word. Whereas
You can say the R word,
but I can't say the N-word. I want a
No,
card,
you can't
man.
say the
I
R.
want
You
my
can't
pass.
say the N word.
I want my pass.
The N word got the R letter in there, but you can't say the N word. Yeah, we're dumping, ladies and gents. We are dumping.
It didn't seem like they were planning on ending like that, though, did it?
I don't think so.
It really seemed like he messed up and said something he shouldn't
He
have said.
did a Hulk
corrected
Hogan. We
himself,
coming
and
for
then-
you. He did a Hulk Hogan, bro. He did the
Makes
T
stage
Booker.
right, just like Mr. X.
Yeah, he did a Booker T, bro. He did a Booker T.
I had to go
He
back
did
and
not
watch.
mean to say
That's
the
what
R
that's
word.
what I think happened. I think he messed up, realized it, and it was like it doesn't matter. Nobody's gonna pay attention to nothing else I just said. I just said the R word.
Yeah, there, prospector, exactly. He was trying to avoid saying the recession word to not mess up the algo traders. That's so crazy, bro. That's how fucked up this whole system is. And how in favor of Wall Street it is.
I would call that hawkish.
Yeah.
With a cut like they did, and I mean, there's, again, people just, the everyday individual just has no clue like what's upon them. Remember when Chappelle was Black President Bush and he slapped the water off the table and dipped out? Yeah, Powell just did that. I don't remember Chappelle slapping President Bush.
Oh my God, man. So what's your take, man, overall?
It was the ending made it worth my time and the portion of my soul that got sucked away. I tell you every time we do this, why do we do this? But this has probably been the best one because I think that we just witnessed something that wasn't supposed to happen, and dude, just like, I really need to go back.
That's what we want, and after we take that Kruger in the time, we want the gold, sucker. Hulk Hogan, we coming for you, nigga.
Now look at him. He's laughing.
And that's the Jerome Powell right there.
They get back and watch Booker T when he does that, right when he said that phrase.
Oh man, he put it. Man,
we talked about. Sucker. Hulk Hogan, we coming for you, nigga.
Oh fuck! I just messed
right
up.
now. Yeah, that's what he just did. I would definitely compare Jay Powell saying the R word to the same thing. As
that's exactly what he. Yeah, that's
now
exactly
it,
right.
Now that makes all bit of sense.
That's it, Rice. He was like recession.
Oh, but at least
close it and walked off the stage.
Yeah, but at least Booker T didn't walk off stage.
No, Booker didn't walk.
He just stood there with Scary Sherry.
Scary Sherry.
That was her name.
We do this because
it
makes progress in our understanding. There you go, Mr. X. Round of applause.
Yes, we got to learn from all things. And thank you for clarifying that. I don't know how do you say that name?
Where?
Oh, zero fucks given. I love it. Always.
Zero fucks. Yeah.
That sounds like almost like our friend with the last name. Isn't that his middle name? Zero fucks given.
Who?
NFT Demon.
I think so.
Or is it just? Is it just the F word?
No, I think it's zero. I think it's not just the F word. No.
Yeah, it might be something very similar to zero FUX.
Shout out to NFT Demon, aka Jeremy. Yeah, man, great stream. I didn't get anything from it other than him slipping up at the end with the R word, and it algo's triggered.
Yeah, he really wasn't.
And now it's back though. It's come back, as you can see, Rice. But clearly we see the game is rigged. Like he knew he was not supposed to say the recession, the R word. He said it. It triggered a sell off. Now we're going back up.
Zero.
That's
if you're
crazy,
Jeremy,
bro.
let us know if you're Jeremy. If you're not Jeremy, then you can email me at ricecrypto@gmail.com, or you can hit me up on X, RiceTVX. Either or.
So what do we have coming up for you on Rice TVX? I think you just announced that you're pausing.
Yeah, well, I'm not pausing quite yet. I'm slowing the hell down.
You're doing a cut? You're doing a rate? You're doing a cut, or are you doing a pause?
Well, I'm not completely pausing because I technically have an interview scheduled next Tuesday with Aaron Day. And I need to do a few things with a few other people. It just, everything seems to be very counterproductive. And it just seems like it's time to move on to other things, pause this stuff. Because, I mean, literally, it just seems like nothing I'm doing is helping the channel. No. Nothing. I'm just constantly losing subscribers, viewers on the YouTube side.
Yeah.
So if you're watching on Rumble, I put both of my channels, Rice Against the Grain and Rice Crypto, all on one platform. So it'll still continue to exist in that format. But
so are we doing the spaces next week, Rice?
We're going to talk tonight.
All right, let's do it.
Yeah, we got a meeting tonight.
Something special, something up our blazer sleeves, ladies and gentlemen.
Yeah, we definitely need to. I think we need to have a few conversations so we can make sure that we've got our game plan down before we start to do anything. Now, the good thing is, if we do spaces, we still have a lot of time to do stuff. It doesn't really cement anything in with the spaces because of how they're set up.
Mm-hmm.
But once we start doing visuals and stuff, however we're going to do things, I think we need to make sure we're We'll talk about it. We'll talk about it. Just good things to come. Good things to come. It's not like I'm going to stop doing videos. It's just I may alleviate and start to reduce very, very much what I'm doing on the crypto side. What I would really like, honestly, and I got Aaron Day who's interested in doing this. If I could find like 1 to 2 other content creators that wanted to contribute videos on my channel.
I tried that.
Right.
Army Piper Academy. I tried that for a while.
If I could
John
find
Default was one.
Yeah, well, I mean, if I could find a couple people to do that, then what, in fact, it will allow me to do is still keep the channel active without me necessarily being fully involved.
Yeah.
And maybe
I
do
was
like
paying people too to create content, and still
didn't see them change.
No,
I think
they fell off. I don't know what happened. John Hill, tell me what the fuck happened. And remember, I had.
You see that happen with a lot of
Trek with 3Ks.
When some people realize what goes into doing this shit,
yeah,
and then on top of it, to get 0 results or negative results while you're working hard to do it, it's very disheartening. I can understand why a lot of people hang up and stop doing it. Hang up their camera, hang up their mic.
I enjoy doing it. That's why I guess
I enjoy content. I enjoy content, but I've told you for quite some time I'm beyond crypto. Like it's just crypto is just a small part of things, and I don't need to necessarily be involved in crypto content to be able to reap the rewards of being involved in crypto in general. So I do like what I've been doing. It's just counteractive. And if something like that changed, it'd be great. Let's say, for example, we get an interview with Donald Trump. It's the lowest viewed interview of Donald Trump ever of all time. We get a reward for some kind of award from YouTube or some sort of somebody is going to award us for having the lowest viewed Donald Trump interview. And it doesn't matter who it is that we interview, we're going to have the lowest number.
Someone would rip the video from us, and then they would get millions of views, and then they wouldn't even know it came from us.
My McAfee shit. That's happened with my McAfee videos. Taking my McAfee videos and chopping them up and getting more views than me, but my channel's shadow banned, so nobody even knows.
That's crazy. That's happened to me too. That's happened to me a couple of times.
It's frustrating. People don't realize what goes into it, and maybe our debut space with what we're going to do, we can use it as a kind of a transition event from where we were and what we're planning on doing.
Yeah. So look forward. Stay tuned for that announcement, ladies and gentlemen. We're very excited about what we're going to be doing together very soon. This is why content providers use their own websites mostly. That is an even tougher uphill battle.
It can be I did a lifetime membership deal with people with mine, where it was $100 for lifetime membership, and I've got over 100 members on my website. I think it's more like 130, 140, something like that. And if you go to ricetvx.com right now, you can actually watch both of my YouTube channels directly from the website. And if you join on the private side, I've got a complete library of videos that you can watch as a paid member that's behind a paid wall to support.
I'm actually interested to hear what Jeffrey Gunlock here you guys see on the screen. Legendary bond guy. Legendary. I like what he's pretty sound and moderate with his opinion about things. So let's see what he says.
Into this idea, though not utterly convinced, that at some point in the recession, the fiscal and monetary responses will lead to the long end of the bond market perhaps going up in yield, and that could be sort of being signaled, even though it's for just the last couple of hours, by the action today.
Steve, lastly, to you, and you made this point, I thought it's interesting. Some of the criticism leading into today has been that the Fed's been too data dependent. Your suggestion with the move today of 50 basis points is in fact a break from that. Jeff and I talked about the idea of an insurance policy, that the Fed really isn't, generally speaking, in the insurance business, but maybe that's what today really was.
So, Scott, that's a right observation, except for when the Fed essentially in neutral
I
and
still
trying
think
to
of
balance
Fred
and feel
Flintstone
the
when I
way
see this
as to
guy.
where the right
Man,
neutral rate
Steve
is.
Leisman is
Then
a
it ends up being
fucking
an
brown noser. He just keeps his nose up the Fed's ass.
It just looks like what Fred Flintstone would look
I
like
don't
if he
know
wasn't
what he's
wearing.
got going on with that right eye. That left eye he's got winking over there. What the hell is going on, Steve?
Low probability, high risk event. I think that's where Powell is right now. And by the way, Scott, we may end up, I hope Jeffrey's wrong here. It's a bad bet to bet against Jeffrey. I'll acknowledge that about the recession having begun. We may end up calling this, if he's wrong, the immaculate 50 basis point rate cut. And I'll read you what Powell said here. He said the U.S. economy is what this means, the U.S. economy is in a good place. Our decision today is designed to keep it there. The economy is growing at a solid pace. Inflation is coming down closer to a 2% objective. The labor market is still in a solid place. If we end up being okay here, this could be the only and the first ever immaculate 50 basis point rate cut, Scott.
Yeah, Steve, thanks so much, our senior economics reporter, Steve Leisman. It goes to what Claudia Sahm said in the hour preceding the decision that the Sahm rule says we're in a recession already, as you've been suggesting as well. Sahm herself says we're not.
We're not.
Well,
she got paid.
Her own rule.
She got
but
paid.
I use something that's similar to the Sahm rule. It's simply the unemployment rate relative to its 36-month moving average. And we're observably, convincingly above the 36-month moving average. And there has not been any experiences where you've made that crossover without a recession.
There you go,
so
ladies and gentlemen.
You know, on this insurance policy, you see these ads on TV where somebody says, "Oh, our friend died of an aneurysm. He's only 47." They say, "Do you have life insurance?" The guy says, "No." He says, "Well, you better get on it." I think Jay seemed relaxed today because he's somebody that didn't have an insurance policy yesterday, and now he has the insurance policy, and he feels comfortable about that. And the recalibration is absolutely appropriate because he's right. I thought one of the best points he's made ever as Fed chairman was comparing where they were with the inflation rate up well above their target and the unemployment rate in the mid 3.5s. A restrictive policy is a no-brainer under that sort of set of circumstances, but that's not where you are anymore. And I think it was a very wise way for him to make that point.
All right, ladies and gents, we won't bore you anymore.
What do you have coming up, man?
Nothing else today. We'll be doing some trading tomorrow, so guys, come tune in tomorrow at 2 p.m. I might have a guest for that show. And
I'm not against doing something Friday. I'm not against it.
We might do something.
When
Friday.
I do something with you, it's a lot easier.
Yeah, same. So.
Yeah, instead of just doing something solo. And but yeah, eventually, man, I think that something is going to change. Either I'm going to just stop doing the crypto side of things. It's just really the only form of income that I actually have coming in. So that's kind of the only thing, you know. It's like, and I don't want to just put out shitty content. Something I was thinking about doing was doing something that some of these other crypto channels are doing, at least temporarily, to keep things semi-active on the channel, is like take clips from other shit and just like repurpose it. Especially like the Whitney Webb stuff, because I think it speaks for what I would want to say anyway. So it would be like more, you know, about things that I would agree with, and just take a few, just do it as long as I'm staying consistent. See if anything like that starts to change things a little bit, and if things start to pick up and change, then I will put more effort back into it. But it's almost like how I felt back in early 2000, around March and April, when I started to pivot and add the Stranger Than Fiction content on my channel. And I've always felt underappreciated and undervalued in the cryptocurrency space, especially when I look at whose channels are successful. Well, I should say in quotation marks, but you can't say it, but successful.
Yeah. Go follow Rice, ladies and gentlemen, on X right now. Rice TV X is the handle.
Appreciate it. Make sure you guys are following Blood as well at
That's right.
CryptoBlood_. Pull that shit up, man.
I guess.
420 killer. 420 killer. Look at that quant trader from the D. And he had to put Detroit, so you didn't think it was from the dick.
There you go. You already know. Ladies and gentlemen, hit that like button. Subscribe to the channel. All that good stuff. We out of here. Holla.
Holla.
Yo, it's crypto blood, Detroit flow, streaming from the D, knowing what to show. Indicators are wrong point, OG since 12, investing in trade, living life like a pro. I'm Rucker, Jerry, it's just bloods do. Bad motherfucker in a good way, boo. Got my eyes on the charts, ain't no time to sleep. Kick that money, gotta keep it creep. That's my crypto blood, just the toasters on the line. Stacking my coin, got the market on my mind. Bitcoin, Litecoin, Ethereum too. Cash is king, but I'm looking for a new move. I know the culture of the markets like the streets. Got my finger on the pulse, can't nobody beat. I see the trends, I see the flow. Got my strategies in place, you know.
Rice TVX, the mic's live wire. American Pitbull, real gold buyer. Sound money advocate, vice defender. In the crypto arena, he's the top contender. From the gritty streets of the digital age, Rice slaves wisdom, chapter and page. Silver, gold, he scores only the bold. Land, life, and liberty, these values hold.
Twitter, what's on? See me, the stands, evergreen at the sun.
Constitution, deep dive, knowledge revival. Navigate the system, critical for survival. Rice engraved like inscriptions on metal. Pitbull in the game, lead foot on the pedal, foot on the pedal.
Fuck it. Do it live. I'll write it and we'll do it live.
Okay. Ready?
Fucking thing sucks. We'll do it live.
Okay.